positions with you and what I've been doing on StockCharts.com today. I think we should have a good day. I've got a lot of information for you today. We've been talking about the unknown great growth stocks. I pointed out some of these all-time stocks that not a lot of people really know about. And I have a kind of an interesting one, a different take today. This is a stock I've been involved with, oh gosh, since 2000, maybe even almost since its inception. This week, I'm also going to cover what I think is a great growth stock. You'll see that the United States stock market, which after yesterday, there's some really interesting things are happening here. Gold bonds, and then we're going to have the open mic questions. So if you have questions about stocks or commodities, in the second part of the show after our break, feel free to ask questions about, and again, I don't know I can answer all your questions. I'm certainly going to give it my best try, but I do have access to all data and my indicators, and usually those can give us some pretty good answers. Plus, we're going to give away a free subscription to my weekly commentary on Larry TV with a little trivia question for you about Thanksgiving, so stay tuned for that. Get your questions ready. In the second half, I'm going to do everything I can to answer your questions, short-term or long-term stocks or futures. And again, I don't know that I can do it because I don't have access to, I don't know about all the markets, but I'll give it my best shot. Okay, here is the Wall Street cash register. Oh my gosh. You know, people badmouth Wall Street, but when you think about it, really, it's the greatest wealth-making machine, I think, in the history of the world. If you just stay fully invested and upgrade, say, in the Dow Jones Industrial Average, you make about 8-9% a year for doing nothing. You don't have to paint it, feed it, mow it, no taxes on it until you take the profit. I mean, what an incredible rigged money-making machine. People just don't realize it. They seem to have a negative view of it, but in terms of a real Wall Street cash register, oh my gosh, wait till you see this one. This company has paid out almost $20 billion in cash dividends. Real money, $20 billion paid out to shareholders. I mean, talk about a cash register. Can you imagine that? $20 billion paid out. This is a record of their dividends. They started in 1997, and you can see what their dividend stream has been. Last year, it's just incredible what these guys keep paying out year after year. In dividends, huge amount of money. By law, this company must dividend out 90% of their profits. So they have to dividend out their profits. They get to keep 10% for themselves with special tax considerations because they're giving you the other 90%, you the shareholders. That's the bottom line. It's an REIT. You're probably aware of some of those. What a deceptive view, though, looking. This is the stock in question. The stock chart's not very impressive, is it? I mean, if you bought back here in 2000, you're right back where you started one from. So that doesn't look like kind of a loser stock, doesn't it? Or is it? Let's take another look. Here is the exact same company. The only difference is this shows the dividends as well as the stock price. So here we're seeing just the stock price. Here we are seeing the stock and the dividends. So the dividends obviously have been a huge impact on the stock. Remember, where they're paying out $20 billion in dividends, you've got to add that to the stock price so it doesn't look like this. If you had bought the stock back here in 2000, you wouldn't be here now. If you bought it back in 2000 over here, you would be up here. And how does that compare to the rest of the markets? And what is the company? It's NLY Mortgage. This is the #1 REIT in the world. And so that's the stock. The symbol is NLY. Their forward PE is 8.6. The funds own a little bit over half of the stock. Funds are fully invested in it. Price to book is 1 right now. And price to book less than 1 is bullish. So at 1 is not bearish at all. If it gets much above 1, 1.5, that would be a worry sign to me as being overvalued. The dividend right now, staggering, about 11%. I mean, just think of that, 11% on your money, or you can put it in a bank account and you're going to get, what, 1.5%, maybe 2%. And all you have to do is be invested in the stock to earn 11% dividend. The returns really matter. The blue price is the stock of NLY. With dividends reinvested, put back into it. The red is the S&P 500. Now this is from 1997 to 2013. Oh, NLY had a big slide in the market then, didn't it, in 2013? Keep this in mind. And keep in mind the performance relative to the other stock indexes. If we look at the other REIT index, that's in yellow, our NLY outperformed that as well. This is walking it forward. This was 2013, that little decline we saw in NLY mortgage. And this is where it is now. And we again continue to see that the stock market, I've painted it yellow here, has underperformed NLY mortgage itself. So in terms of being a long-term net profitable stock, it has beaten the market average by a substantial amount. They're up 790% since the initial public offering of the company. One thing I like about it, Warren Buffett has what I would call his domination rule. You want to buy the biggest company in the industry. Well, clearly it is NLY Mortgage. If we look at the other REITs, this agency is the second largest one, about half as big as NLY Mortgage. So, and you can go down and see that a lot of little REITs have developed, but none of these come even close to where NLY is. They are the big one in the room. There is a strong seasonal influence for this stock. Usually it's up 60% of the time in November, and it's always had a rally in December. So there's a seasonal pattern for NLY Mortgage to rally, excuse me, about this time of year. So short-term traders can be thinking about that. Here's a trading view from our favorite charting service, StockCharts.com. Here's a strategy I really like with the stock. Notice the stock, again, we're looking at price without dividends in it. So when it gets really low, it gets beat up by it, and you're going to have a bit of a rally in price and also pick up the dividend. What a nice play that is. So when this stock gets really beat up, I want to step in and be a buyer of it. In 2018, again, it gets weak. We bought some down here, or my daughter did, because it was beat up. And we know this has been a very stable company over the years. Technically speaking, right now, the stock has been pretty strong. If we look at accumulation, that's the purplish line that you see up here, and there's been a lot of buying coming into this stock. Notice that the accumulation line broke out of this point here prior to price, and price follows. See, when the price declined earlier, accumulation led the way as well. So one of my favorite tools to look at the market, where it's going, and the internal strength is simply looking at accumulation. And NLY Mortgage has been good in that respect. We can do a projection of where we think the stock is going, and I'm doing a cyclical projection here. It looks like it can continue rallying to the first part of February, then a little decline in this market. The strategy, I think, is to buy when this is below book value, or it's extremely oversold, or we're at cyclical lows or seasonal lows in the marketplace. So do I want to be a buyer of it right here, right now? No, I don't. Because as you saw, it's been pretty strong in here. But the next time it gets beat up again, I want to be a buyer. It's interesting, a lot of people write about this stock, and I have to laugh about it. They're all authors. They're people like myself, so-called market gurus. But you know what? The guys that are running this company that are giving out $20 billion in dividend, these guys are really good. They've been really smart. The stock has held up really well. So all of us pundits on the sidelines, we don't know nearly as much about the operations as I think the guys running the company. So long-term great stock, especially for a high dividend, NLY Mortgage. Okay, it is contest time. I'm going to have a free 2-month subscription to my market commentaries I make every week at ireallytrade.com. The first person to type in the correct answer, got to be the first person, you're going to win. So get ready, get your typing fingers on, and here we go. George Washington was the first president to celebrate Thanksgiving, the holiday coming up next week. Which president made Thanksgiving an official holiday? George Washington was the first one to have a day of thanks for America, and it was finally made an official holiday by another president. Let's see if somebody can get that one correct. And while we're waiting for that, I want to talk about trading news. News is almost always after the fact. So why do you even read the newspaper? Our task is to know the future today. That's what I tried to do here, show you trades in advance. To be a good speculator, you have to see the future or have a view of the future at least. News doesn't do that. News tells you what happened today. It doesn't tell what's going to happen in the future. So what's going to tell us that? What will tell us what happens in the future, I think, are cycles, informed buying, like I just saw the accumulation in the marketplace. That gives us a glimpse of the future. When the markets are overvalued or undervalued, that tells us the market direction is going to change. So our valuation models are really important. Seasonals can also set up a suggestion of which way we're going to go. And there's some other technical tools as well. But if you want to know what's going to happen in the future, you're not going to get it from the newspaper. However, you can still learn something from news. I'd like to share that with you. Since news is after the fact, what we can do is note the market's response to the news and key off of that. So if we have bullish news and prices don't firm up, well, that's bearish. If we have bearish news and prices don't get weak, they should, right? Because we had bearish news, well, that's bullish. So the only way I know to trade news is how the market responds to the news. That's the key to trading news. We talked about some trades coming up. Macy's, I'm still interested in being a short seller in Macy's around the first week of December. Notice that typically the stock comes down. Most retail stocks do, so let's put it down on our list as a potential short sale coming up the first 7-8 trading days of December. UPS has a strong seasonal pattern to start to rally. It's pulled back in here a little bit. We're just about into that seasonal sweet spot, coming in starting just a couple of days before Black Friday. So let's start to put our blinders on, our glasses on, to take a short-term trade in UPS almost any day now. Strong seasonal influence kicks in starting really tomorrow. Home Depot, about the same thing. Seasonal pattern kicks in about 3 days from now. So again, another nice short-term trading opportunity. Home Depot, you can buy on the 5th trading day prior to Thanksgiving, hold for 10 days. In the last 34 years, that's been a winner 34 times. We're going to talk about some other trades that I see coming up in the future as well. The big point I want to make about these stocks we've looked at, there's a strong seasonal pattern for retail stocks to rally at Thanksgiving, in part because I think of Black Friday. Investors, oh yeah, all those retail sales are up. People are buying a lot of stuff. And then investors go buy Walmart, they buy UPS, they buy Target, they buy Costco. The very strong seasonal pattern in these retail stocks at this time of the year. Then after Christmas, the strong ones start to decline, and weak ones like Macy's, which I really like as a short sale here, because the stock has been weak and it comes into a seasonal decline. So I think that's going to be a really nice setup opportunity for short sellers. Also, stocks that decline a lot just before Thanksgiving, we'll be talking about that, or after Thanksgiving rather, the jewelry stores. So there's another trading opportunity on the short side. I won't be doing a show next weekend because it is Thanksgiving holiday on Thursday. But you will want to be looking forward to jewelry stocks as a short sale opportunity around the 1st or 2nd week of December. That's typically what happens. In the meantime, we have our UPS seasonal trade and Home Depot seasonal trade. And also watch out for Walmart. It usually rallies shortly before Thanksgiving as well. In fact, that's another one in the last 34, 35 years. Had you bought Walmart a day or two before Thanksgiving, you've always made money on a short-term trade in that market as well. So there's your Home Depot trade, and I'm going to be back in a little bit with the future, some other trades coming up in Starbucks, one of Rachel's favorite stocks, and I've got an interesting Starbucks Seattle story to tell you. So I'll be back in a little bit. Let's look at the future. This is Larry Williams back showing you some of the trades I'm interested in right now. One is Starbucks. Starbucks has a very strong seasonal trade to start to rally just about now until the 9th of December. You can see the seasonal pattern in my chart, pretty clear here. I recall so well being in Seattle, I don't know, must have been 30 years ago, shopping out Black Friday. I'd been using a lot of stuff called artificial intelligence and neural networks, and we thought we had really figured it out with this high algorithmic trading thing, and the market started rallying Black Friday, and I lost about $45,000, $50,000 in one day following the stupid black box computer trading system, drinking Starbucks, and just like, I couldn't believe it. We thought we'd really figured it out with this neural network trading program, and it was absolutely wrong. What was right was stocks really rallied at Black Friday. and they sure rallied against me that day. I'll never forget that experience. So for you Starbucks traders, nice short-term trading coming up. Now, after the 9th, the stock tends to come down a little bit, so you want to pay attention to that. Yeah, if we start to rally in the first week of December, look to take your profits. The seasonal sweet spot, the sweetest spot in Starbucks, is to buy 2 days before the Thanksgiving holiday. You can use a 3-point stop. You can exit after being in the trade a day or two. So this is a short-term trade. And in the last 26 years, that trade has been successful 26 times. So buy 2 days before Thanksgiving, use a 3-point stop. You got a profitable trade after being in the trade a day or two, take your profit, move to the sidelines. Speaking of coffee, this is really interesting. The number of people drinking coffee is at an all-time high now. There's been a lot of growth from 57% of the people in 2016 to 64% of people are drinking coffee now. Over the past 6 years, soft drink consumption has gone down, it's dipped to 35%. It's really dropped down a lot because people, I think, are more concerned about sugar, fructose, corn syrup in particular. Notice a lot of soft drink beverage guys are going over to sugar, they're getting rid of corn syrup. And people throughout the world that usually have drank tea, like in England and India and Japan, are switching to coffee. The Starbucks revolution has swept throughout the world. It's shocking. I remember going to China years ago and I saw Starbucks. I was shocked. The line was maybe a block long. Now when I'm in Shanghai, yeah, you got it, a Starbucks on just about every corner. Same thing in Tokyo, same thing in India. Coffee is huge. So there's been a massive consumptive switch to coffee, and this should lead to higher coffee prices. India is the 6th largest producer. Consumption in coffee in India is up 40%. There used to be an old adage that India produced so much coffee, but nobody there ever tasted it. Well, that's changed now. People in India are drinking coffee. So let's look at a coffee cyclical forecast. The cycle forecast suggests that around end of this year, we should see a pretty good up move in coffee prices. Now, what's happened, coffee's had a pretty good up move. It's pulling back now, so I think congestion here. And as an intermediate term trader, I'd like to see a buy point firm up here, maybe right around Thanksgiving, right after it. And then I would think we should see a rally into the first part of February. So you coffee traders, there's a potential trade for you in the coffee market. Okay, contest time. Do we have a winner, Rachel? Who was the first president to make Thanksgiving an official holiday?
We have a winner, and his name is Peter Cook.
Peter Cook, congratulations. Peter Cook knew that Abraham Lincoln was the first president to make Thanksgiving an official holiday. And in doing the PowerPoints, I really reflected on this. You know, we don't really see Thanksgiving holiday now as what it was. It was to give thanks to God for this country and for what we've created here and the blessings that everybody has. And now it's like a time to go out and buy stuff and shop stuff. So maybe we can all reflect a little bit on the real reason for giving thanks at this time of year. As an amazing country, we have trials and tribulations like we're having right now, but we get through them. America's phenomenal. Okay, let's talk about the stock market. Now this is a cycle forecast I showed a couple of weeks ago, I think. We expected some weakness to come in right before Thanksgiving. Well, we've seen that weakness to come in, haven't we? We saw, you can see the down close we saw yesterday. This is an update. I think what we're going to see is there's a rally coming. We're going to have maybe a little bit more dip back and hold in here for a couple of days. As you know, I showed my positions from long the S&P from way back here. I am now flat, the S&P market. Got flat yesterday. And now I'm waiting for another short-term buying opportunity. Then I think we're going to see a rally up to the 5th, 8th, somewhere in this point, probably maybe the 6th, 7th, a pullback, another little rally, could even make new highs, and then a decline coming right at the end of December. Now we'll be able to look at that more as I come back for the next TV presentation here on StockCharts.com. But my view is now a couple more days correction in here, then a nice strong rally into the first part of December, then get ready for a down move in the market. A down move like what, a bear market? No. But we could have a pretty good break in the market, something like we saw in August, something like we saw in October. Certainly point, the market's just technically has been so strong that you want to take your profits. Fundamentally, no, we're still in a fundamentally bull market. But that doesn't mean we can't have, we've been in a bull market. Oops. we've been in a bull market all along here too, and we had breaks in the market, right? And as a trader, intermediate term trader, I'd like to get out here and buy back here. That's what I'm going to be trying to do up here. If I do get back long again here, take profits and then wait for a break, and maybe even sell short for that break. On a very short-term basis, this is my intermarket forecast on a 15-minute bar chart. This was made, I don't know, a few hours ago. So that the market should break, have a rally, and continue working lower today. So that's on a very short-term basis of what our cycle projections are telling us most likely will happen. So let's talk about some potential trades here. Gold, worldwide commodity. My gold cycle projections, we were very bearish on gold back here. Then last week said, get ready for the market to rally. It started to rally. Question is, how much longer? I think it can rally till the end of the year. The longer term cycle suggests that, so I don't want to rush in here and sell it short. I think that we're going to probably move back into these old high areas here. So the bullishness, short-term bullishness we talked about last week, is still in effect. Silver has been weaker than gold, so I'd prefer to stay with gold. The cycle forecasts you see are done using the timing solution software, by the way. So with that, let's go to open mic. Fire away. Please write in your questions. I'm going to do my best to answer them. If you have questions on stocks or commodities, Rachel will tell them to me, and I'll pull up my charts, and you'll see the StockCharts.com charts, and we'll see what we can come up with here. So Rachel, what do we have? Anything yet?
Yeah, we have a
Great.
question and a couple charts. So let's start with the question first.
Okay, and the question is?
Do you think that small cap stocks will begin outperforming once the short-term correction is over?
Probably. I don't know the answer for sure, but here's how you can tell. As we decline the next couple of days, look to see how weak or strong the Dow Jones Industrial Average is. If the Dow Jones Industrial Average is stronger than small cap stocks, big message there, because that's telling us big money would rather be in blue chip stocks than small cap, which suggests small caps will not rally well. Small caps should be a little stronger here on any pullback. If they're not, I think that's the message.
Okay, and we'll have our first chart up is IBB.
IBD.
Oh, B.
IBB.
Yes, sorry.
Double B's, okay. Well, we're a long ways away here. I'm in Tampa, Florida today, so we can't hear everything over the internet as well as we'd like to. So this stock has been strong. It's been in a nice uptrend here. It has a seasonal high, though, coming in. My sense is that, first of all, professionals have started to move to the sell side of this market. I think it's going to rally up to about 120, and I'd want to take profits there. So short-term rally is in effect. It should move a little higher here, but the funds have started to take their profits, and I would want to do that if I was long the stock as well. I think that right above the 119, 120 area, you're going to see some selling pressures.
Okay, and then another one is from Mona, and she's asking about XOP. It's an oil exploration ETF, and it's at 10-year lows. Is this the bottom?
I don't know this is the exact bottom because it bothers me this stock has been down so long while the rest of the industry has been pretty strong. But I can tell you this, there's a cyclical low coming in here in about 2 weeks from now. And I expect this market to start to rally at the first of the year. I expect that rally could last into April, maybe March. So I would not want to be liquidating a position here. It's not the type of stock I'm really interested in, but we're really close to a nice cyclical buy point in here. And the funds have been nibbling away. They're not aggressively long here, but they have been nibbling away at this market. So I think you're going to see the market rally between now and into March, April of this coming year.
Okay, and the next one up comes from Brad, and he is asking about the British pound.
The British pound. Oh, Brad. All right, let's go look at the British pound. I'm going to look at, of course, the commitment to trader report because the commercials have been so good in the future market and especially in the currencies. And what we see is the commercials have started to move over to the sell side of this market. The small traders become very bullish in this market. And I do a valuation model, Brad, where I look at the British pound versus interest rates, and we're in an overvalued situation there. So I think we're going to see this market set up for a sell signal. Seasonal pattern of the market is to go down in here. Commercials have backed away from their big bullish position. So frankly, as a shorter term trader, I am looking for a sell signal in this market. I move back down into areas we saw the 1st of October, something like that.
Okay, and we have another one from Phil, and he's asking about live cattle, short term, intermediate term.
Oh my gosh, the whole thing. I don't know if I can answer all that, Phil.
Yeah.
But we're giving it a try here. Cattle, I think, is going to have a break in here to the downside. Seasonal pattern is down. The funds have become real heavy buyers here. They're usually wrong. The small speculators who have a good record in this market have moved over to the sell side. So taking out the lowest low of the last 10 days in this market, probably a pretty good sell signal. So I think we're going to have a pullback in here until the first part of April, maybe something like that. Longer term, I really don't know. This market also is in the overvalued zone. So if I was long this market, I have very tight trailing stops on it.
Okay, and this is always a difficult question to ask, but apart from percent R, what is the best indicator to predict future pricing?
Well, there's not any one indicator that predicts future prices the best. I think it's a combination. If I had to, I'd say either seasonals or cycles, because they show us a glimpse of the future. But that glimpse doesn't always come true. So I think you have to combine that with things like fundamental measures, a commitment to trader report. To see the future, it's a combination of ingredients. Cycles and seasonals give us a suggestion of how prices should rally, but it's a suggestion at best. And with that, let's go to, unless you have one more question, let's go to.
Nope, we're ready to go back to your
presentation. Okay, we'll go back to our stuff. Yep, I want to get to the Bitcoin market. This is our Bitcoin forecast. We talked about this market. I think we're going to see it rally in here a little bit, but the buy point comes up around that first week of December. That's been a pretty good cyclical point for this market to rally. In terms of my long-term view of Bitcoin, I wouldn't touch this thing with a 10-foot pole myself as a trading vehicle at best. Bonds, I think we're going to have a bigger move coming down. We've been showing this chart for some time. We expected the market to rally. It's done that, but I think there's a sell coming up. So the question is when. Probably around the 1st of December, our cycle forecast picked up this low we talked about last week, but we're getting close to a sell in this market. So I'd want to be paying attention to that as a potential short-term trading opportunity. Well, that's going to wrap it up for this week. If you'd like to look at what I do, you can go to ireallytrade.com. We have a stock course and a new futures course where you get to learn from me or just watch my weekly commentaries at $29.95 a month. We have buys and sells and setup markets, and we really go through all the markets. It's not just buy here, sell there. It's like the show we're doing here. It's educational. I try to teach, not just say buy here and sell there, help you get a view of the future. And I hope I did that today and look forward to seeing you in 2 weeks from today.